Are we going to continue to see home prices here in Sarasota decline? Well, let's take a look. Hi, I'm Nick with the Iannitti Group. Just want to come at you with a real quick housing update for Sarasota for February 2023. So a couple things to realize, right? We still have, basically incredibly low inventory, although we keep hearing in the news that inventory is on the rise. And that is true, right? When we look at here, 2023, this is where we're at kind of with our current level of inventory. And it is definitely up from 2021, 2022 through pandemic. But when you look at pre-pandemic, we're still not anywhere near where we need to be. That's very important. Okay, when we look at it here on a change of inventory across the country, you can here see Florida up about 120% increase in inventory, right? That's year over year. But when we look at it, month over month, it's only like -2%, right? So what this basically means is that we're starting to see that inventory kind of level off, okay? When we talk about recent price home changes, we've definitely seen prices come down here in Sarasota for single family homes from the median, the height was pretty much in October. We actually fluctuated up and down a little bit all year long, but the spike was really in October. And to now, we've lost roughly about almost 14%, okay? When you look at it like this though, year over year, remember, these are median numbers, so the true middle. This is for the entire county of Sarasota, and this is for single family homes. Okay, our sales price, median sales price right now is about 460. That's down only 1% year over year, right? But I told you it's down about 14% from the height. So a good way to look at it is basically we had a lot of gains in the beginning of 2022, and by the end of 2022, we basically gave all those gains back, right? And we know that was directly caused by the increase in mortgage rates. Mortgage rates essentially doubled in 2022. That's never happened in the history of mortgage rates. And essentially buyers' affordability just got crushed. So that's where the demand went, okay? Our active market time is up 314% to 29 days. Okay, that's up from like we were selling homes in like 5 days, which was kind of crazy. Our original percentage of original list price is down 4.8%. That's again tied to that sliding in prices. But here, look at this, our month's worth of inventory, right? Yes, it's up 366% year over year, but we're still only at 2.8 months worth of inventory. Remember, we need 6 months of inventory for a balanced market, okay? Everything above this line are our lagging indicators telling us where the market has been. Everything below the line is the leading indicators telling us where the market's going. When we look at our active listings, it's up 238%. Well, things are taking longer to sell, again, with a smaller buyer pool. Our new listings, though, this is good news. It's up 5.8% year over year. So things, again, are still coming to market. However, our pending listings, it's taking things longer to sell, right? We know that with days on market, our pending listings are down 8.7%, and our sold listings are down 37%, okay? This is directly related to basically this decrease in buyer demand. We've seen a lot of sellers wanting to pull back and kind of hold off until the market kind of stabilizes. So what's going to happen with stabilization? Well, I think that's been the biggest issue last year is that we've seen so much fluctuation in rates. Now that we've seen the mortgage rate kind of level out right around this 6%, I think we're going to see buyer demand start to come back in, okay? Keep in mind, we've had a lot of conflicting information in the economy. We had 2 consecutive quarters of negative GDP last year, it's kind of a layman's term definition for a recession. However, the current administration kind of combated that with the jobs numbers. The Philadelphia Fed did an autopsy on those jobs numbers, found out they were grossly inflated. Yet we just had a decent GDP our last quarter. So things are kind of still up in the air. About 70% of economists surveyed said we're probably headed for some type of recession this year. Just keep in mind that that isn't the end of the world. Remember that home prices and a recession are not correlated with one another, okay? But mortgage rates are directly correlated to a recession. So what could happen is if we do wind up in a recession sometime this year, we could see mortgage rates come down further. That will entice buyers to come back from an affordability standpoint, and we'll be back in the same situation we were during the pandemic, where we start to see home prices starting to rise. It's kind of that first in, first out. Whenever you're dealing with high ticket items, they're the first things to slow down. But we may see a situation where the housing market is what leads the economy back to full recovery by the end of the year. So that still remains to be seen. But if you have questions about what all these numbers mean, what is your home worth? Is this a good time for you to buy or sell, depending on what you've got going on? Just reach out. I'm more than happy to answer all those questions. And that's it. Thanks so much for tuning in. Remember, who you choose to negotiate for you absolutely matters.